Standard & Poor's says that U.S. home prices in April fell 4% from last year, their biggest drop since November of 2009. The ratings agency's latest Case-Shiller index does show an unadjusted increase in 13 of 20 cities surveyed, but in other cities, including Cleveland, Detroit, and Las Vegas, home prices are now at their lowest levels in more than a decade. Joining us right now is the co-founder of the index, Macro Markets chief economist Bob Shiller. Bob, good to have you back.
Nice to be here.
So, you know, every time we have you on and we see these numbers continue to go down, we
not
say,
today.
Well, not
on a monthly basis.
Not on a monthly basis. And well, is that significant? Let's talk about that monthly basis, because we did see a little bit of a positive sliver of news. I mean, is that a good sign or too early to tell?
Most of it is seasonal. It's the summer season coming in. But I do see a little bit of optimism suggested by this, because the deseasonalized number on our 20-city index is only down 0.1%.
Right.
So it's looking better. But it's only 1 month, and it's too soon to tell.
Well, you know, somebody, actually, Mike McKee and I, we were talking earlier in the newsroom, and he said, you know, this is kind of old data, right? It's April, it's 3 months that you guys track, so it's actually, what, February, March, and April data that goes into this number. I mean, can we read too much into it? Because here we are almost July in terms of what's going on right now.
Well, you have to look at the whole picture, and there's lots of housing-related data sets coming out. Some of them that I particularly like is the National Association of Home Builders Housing Market Index. They have a traffic of prospective buyers.
Right.
So that's we have that for June now, I believe, and it's just not it's not up. It's down a little bit. So it's still the market still has the look of stuck in the doldrums. It's been 2 years now. We saw big drops until 2009, and we've been just bouncing around like at a fixed level ever since.
I mean, should we be surprised here? I mean, someone messaged me earlier, Michael Fetter, he also follows the housing market. He said it's an inventory problem, and until we deal with the inventory, it's not going to get any better. Do you agree, or what?
It is partly an inventory problem. Unfortunately, there are many problems. You talk about them on the. You were just talking about the Greek debt crisis. That's a problem too.
Makes people nervous, right? They don't want to commit to buying
It's the same thing. It's a debt crisis on housing. It's the result of a period of optimism that 5 years ago that got excessive, and now we're suffering the consequences.
You've watched the housing market for a while now. I'm just curious, when you look at things historically, does it surprise you about kind of the depth of the weakness that we've seen in the housing market, or no, considering what we went through and maybe the overbuilding, the over-enthusiasm when it came to housing, that this is maybe where we should be at this point?
I think that there are frequent events and there are rare events in history. Recessions are frequent events, so economists are really good at studying them. We've got lots of them. But big events like that, we've only had two big, sudden housing crises in the 1930s and now. And so we don't have a lot of data on them. That's why it's hard to forecast right now.
But when you see these numbers come out, are you kind of still shocked at kind of, as you said, you know, month to month on an adjusted basis, we saw it was almost flat from March to April. But I mean, when you see these numbers, does it surprise you? It kind of continue to see some weakness in a lot of the markets? Well,
we're down a lot in the last year, but I take a little tinge of optimism from these. Only a little tinge, only a little tinge.
Because of what? Because from March to April
Because I think the housing market is, one thing I've learned in studying the data is it has momentum. It's not like the stock market. Don't ever conclude if the stock market went up one day that it's on a new trend.
Right.
But housing is different, and it looks like it could be the very beginnings, very early of a turning point. Don't quote me on that. I'm saying it's going up now for 1 month.
Doesn't it? I mean, you know, I've been talking to people down here who take the headline number and say, oh, this is so awful, a 4% drop. But if you look at the last 3 months of the data, I mean, 0.1% doesn't seem bad at all. And I don't see why not everybody sees the trend that the price drops are decreasing significantly. Isn't it kind of, it jumps out at you, right? I mean, it looks better in the last quarter than it did for the rest of the past year.
Right. I also wonder why there is such emphasis on the 1 year thing, because the changes in the 1 year thing reflect what data is being dropped in the 1 year and not necessarily what's happening now.
Well, are you saying that we're focusing on the wrong part or the wrong data points then?
Well, it depends on your purpose. So you can look at there's 2 year changes, there's 5 year changes, all sorts of things. What's really significant is we've been going down for 5 years. And we went up for 9 years, from 1997 to 2006. These markets don't turn on a dime generally. Now, it could happen it could be that this is the great turning point. But I have this kind of intuitive skepticism that it ain't over.
Well, so what do you want to see then in the next month of data? You want to obviously see continued improvement, correct, month over month?
Yeah, the problem is that the whole economy seems to be weakening a little bit. So, I mean, retail sales are down. We're still seeing a high saving rate. We just don't have a lively economy. And right now, we're debating the national debt. I mean, it just doesn't inspire people to, hey, let's go out and borrow 90%, I don't know if you can do that anymore, 80% and buy a house.
And still so many unemployed. You're right, take your pick. I mean, there's a laundry list of things that could worry people that are out there. I also think there's 1.8 million of inventory of distressed homes nationwide that might come to the market.
Right.
I mean, that too will put continued pressure on prices.
But the good side is that the good side is that there hasn't been much construction and population is still growing.
Right.
And home prices are not high anymore. So
yeah, but if you don't have a job, so what?
Well, I know. It goes both ways.
Yeah.
The home prices are at the most affordable levels that we've seen in a long time. And if you get continued sort of off the beaten path, out of the box stimulus, like releases of oil barrels from the strategic reserves, do you think that people will start coming back? I mean, is that the kind of thing that we need?
Well, we need stimulus. They'll come back eventually. I just don't know if this is it. We've just seen one monthly blip, not very big. You know, it's mostly seasonal. I still have this skeptical side that it's been going down for 5 years, more or less, and it might not be over.
I have to say, Bob, though, you are less pessimistic than we normally see you.
Yeah,
you're always skeptical, but you're saying this could be the turning point. We won't put that on the record. We won't quote you, but I'm impressed by your almost optimism.
I'm actually fascinated. I would love to call a turning point, but I'm not going to do it today.
Because that's right. You've come in several times, and we still feel some pessimism from you. Right now, we felt a little glimpse of optimism. So you do see a little bit, maybe potentially of a turn here.
We've also seen the unemployment rate go up in the last few months. That looks a little bit like a turning point, pointing the other direction. So I'm just not ready to, but I want to do it. I want to call a bottom in the market someday.
We all would like to. Well, we'll get you back here in another month and then see if that turning point maybe is more significant.
Okay.
Bob, thank you as always. Bob Shiller, Macro Markets Chief Economics and co-founder. We appreciate it, Bob.